Hello everyone, thanks for joining me in this month's market update. I'm Tyson Romanick, Senior Portfolio Manager here at Baker Boyer. And in this update, I'm going to discuss the government shutdown and what that means for investors. Now, we've been getting a lot of questions about this lately with concerned clients, and we want to make sure we address those. So we're currently in the longest shutdown in US history. And interestingly enough, the markets are still at all-time highs. We've had about 20 shutdowns since the 1970s. So this is nothing new. The markets kind of know how to digest this and move forward. So instead of a panic, markets just kind of yawn at it. But one of the tricky parts for markets is when the government is shut down, those agencies of the government aren't producing some important reports. We don't get GDP numbers. We don't get inflation reports. We also don't get payroll reports, and those are important factors, especially for the Fed, to make policy on. The Fed did cut rates last week, so they did make a major decision without that, but they did say going forward that if the government shutdown drags on in December, it's going to be less likely that they make a December cut. So the percentage, we went from almost 100% chance of a rate cut in December now down to 60%. Personally, when I heard that, I thought, with the government shutdown, that makes consumers less likely to spend, businesses less likely to spend, kind of would cause a slowdown and there'd be a higher chance. But, the Fed just doesn't want that uncertainty to make big policy decisions without actually having the data to back it up. The market didn't like that. We did see a little bit of a pullback, but since then we've rebounded. But overall, unfortunately, the chance of a cut did go down a little bit for next month. But the bigger risk isn't short-term volatility in the market. It's kind of the longer drag that could happen on the economy with this shutdown. So, government programs are kind of paused right now. SNAP, they don't have any money to give out, and SNAP helps about 12% of the U.S. population. It's about $188 per month per person on the program. And that's real spending power not going into the economy. It's not going into grocery stores or gas stations or local communities. And so consumer spending is a big part of GDP and growth. It's actually about 70% of GDP is consumer spending. So if there's a slowdown in that, there's a slowdown in the economy. So I think that is more of an important issue kind of going forward the longer that this drags on. So to sum it up, as of right now, this really isn't anything new for markets. They continue to kind of move on from here just fine. But the lack of economic data does cause issues for economic policy like rate hikes or rate cuts. And if this does drag on, it could be an issue for the consumer, which would be a longer economic issue. So, the longer this goes on, the more of an effect it'll have on the economy. So with that, if you have any other questions, please reach out to your Baker Boyer representative.